Hi there, this is Alvin from Dr. Wealth. We saw the REITs rebound very strongly in the last 2 weeks. As we can see here, and the IHS REIT index is up 3% from just 2 weeks ago, right? So since 31st October 2023. And investors are probably wondering why are these REITs share price going up and whether the REITs have reached the bottom. So in this video, I'm going to share with you my views about this. So the very first thing is that it is likely due to the long-term interest rate falling, okay, and that has helped not just the REITs but in general the stock market, especially in the US, to rally in the last 2 weeks. And that has given investors some hope that the bull run may still be going on. And what we can see here is the US 10-year bond yield, right? It has hit almost 5% in the middle of October, and since then it has started to fall to just 4.63% at the time of recording. So having these long-term rates going down, it's a good sign that the interest rate may not stay so high for so long, right? And that have helped with the valuation of all these REITs as well, because they are very interest rate sensitive, and Singapore follow this US rates quite closely. As we can see, the Singapore 10-year bond yield has also fell, right, from a peak of about 3.5% to 3.13% at the time of recording. So you can see there is really quite a substantial change in the interest rate, and that is why I think that is the key reasons that's driving the stock market, especially for the REITs, and for them to stage quite a strong rebound for the last 2 weeks. And I did a survey and I found that 65% of the REITs have actually made gains in the last 2 weeks. That is more than half of the population of REITs, and which means that you anyhow close your eyes and pick a REIT, you might have made money if you have bought any in the last 2 weeks. Okay, I wouldn't say any, right? High chance is 65%, and average return of 10%, right? So that is pretty much impressive. Okay, even though the index was up 3% because of the losers, just looking among the winners, average gain in the last 2 weeks was 10%. And this is a full table of the REITs that have gains in the last 2 weeks, ranging from just 1% Santeric to all to as high as 68% for Manulife US REIT. And that is, you can see that not all are in the 10% zone. In fact, most of them are not. Only the top 5 had 10% or more returns in the past 2 weeks, and hence the average return of 10% is likely pulled up by these US REITs, right? You can see the top 3 are Manulife US REIT, Prime US REIT, and Pacific Oak US REIT. So they're up 33% or more, and that's how that whole average was pushed up. So which means even this strong rebound is more ring fenced to a handful of REITs that have very this kind of double-digit returns. Okay, so we want to focus definitely on that first 3, right? Because investors who want to buy the bottom or want to play on the rebound on the REIT prices, they might want to look at some of these more speculative plays, right? Because it is these speculative ones, they are more volatile, and hence the price gains in the rebound can be more substantial than those more stable ones. Okay, the stable ones are definitely more suitable for long-term holdings, but if you just want to buy and sell, right, then definitely these 3 US based office REITs might be of interest to you, right? Because people are also wondering, right, after they've fallen so much, up to 90% of its share price has been decimated, could this be a sign that the rebound has come, right, after we've seen such a strong 68% bounce for Manulife REIT? Okay, so let's take a look at these REITs in more detail. So this is the third quarter results for Manulife REIT, and generally it still have that same problem, right, because the gearing ratio is more than 50%, right, and once it has crossed the 50% mark, it cannot borrow anymore due to the regulations, and also it previously hit above 60%, which the lending covenants have came in, and the banks forbidden Manulife US REIT to distribute dividends, right? The lender prohibited the Manulife US REIT to distribute dividends. Hence, that caused the share price to fall quite a lot, right? If a REIT doesn't give dividends when investors buy a REIT is for dividends, then what is the use of that REIT, right? So that is how Manulife REIT share price was being punished greatly. And things have not been improving, right? Although this is also taken from the latest third quarter slides from Manulife REIT. They did say that the US market remains soft, but there are signs of bottoming. So they gave two sides of the coin, right? In terms of the statistics, they still don't look good because there's a 4.2% Q on Q leasing volume drop from the last quarter, and January vacancy is also increasing. And also transaction volume is down 69% year to date. So you can see the past, of course, the historical data or the statistics that we got so far is not encouraging at all. Of course, looking forward, they do see some positive signs, right? The tenant base is actually growing, and also the employers are issuing stricter return to office mandates, and that could help increase the occupancy in the future. In the future, you are just looking at 26% of the norm new developments coming up. So there is a shortage of office, right, which can moderate the prices going forward. Okay, but of course, all these are still looking forward, speculative conjectures, which we won't know until the numbers really show up, right? So I'm not as optimistic, okay, when it comes to that outlook. And there are some other issues that I wanted to highlight is that they are going to do another year-end valuation. Okay, so every year the REITs need to revalue their properties, and the issue with Manulife REIT was because the valuation has dropped so much that caused their gearing ratio to shoot above 50%. So they are going to go through another round of valuation at the end of 2023, and it is also likely that the valuation may go down, right? Even this is a quote, all right? Office valuation in the US remain under pressure and are likely to decline further in 2023. Okay, that's not from me, that's from Manulife US REIT, and that means that they may suffer another bout of devaluation in their property, and that would cause their gearing ratio to shoot even higher. So they will definitely likely to stay above 50%, which will cause them not able to borrow more money, and at the same time they are negotiating with the US bank to allow them to distribute dividends eventually, right? So now they just get below 60%, but if the gearing ratio should pass the 60% for the unencumbered gearing ratio, right? Okay, so in that case, then they will trigger that covenant again. They would not be able to distribute dividends. So they need to resolve this, and it seems like there might be another issue that's coming up, right? So just another month or so, right, 1.5 months from now, we will know the true picture of what's going on, okay? And the other REIT, the second REIT that performed the best in the past 2 weeks is Prime US REIT, and it's similar in the office space, Grade A office kind of properties. And they did say that they have a buffer of 12.9% from the valuation done in 2022 in order for them to keep within that 50% leverage threshold. Okay, so that is at least more encouraging, but there are many buts over here. Okay, the first but is that is 12.9% enough? Okay, and second thing is that there is actually they did one less round of revaluation of the property as compared to Manulife REIT. Okay, so let me show you this table. So at the end of FY 2022, Manulife US REIT has a revaluation loss of 10.9%, right? The property value dropped by 11%. And for Prime US REIT, it dropped by 6.7%, right? Naturally, because if, let's say, the rental demand goes down for this office REIT, valuation will go down in tandem. And in mid-2023 FY, Manulife US REIT did another round of valuation, and that dropped from 15% since the valuation done in end 2022. Okay, so it's not inclusive of the 11%. So it's on top of the 11% drop, there's another 15% drop in valuation in just 6 months. And for Prime US REIT, they didn't do any valuation in June 2023. Okay, so it is still unknown how much valuation drop will there be. Okay, there will certainly be a valuation drop. It's just a question of how much it's going to be, and whether that 12.9% buffer that they talk about, is it enough, right? Otherwise, they would not be able to borrow anymore as well, okay, because the debt headroom is gone if the valuation fall too much. So we won't know how much the valuation is going to fall for Manulife REIT. We don't know how much valuation is going to fall for Prime US REIT as well, and whether that 12.9% buffer is enough. Right? Looking at the gearing ratio, Manulife US REIT is at 56% and Prime US REIT is at 43.7%. Right? They are probably in a similar situation, okay, just that Prime US REIT skipped one round of valuation. So that is a big unknown that's going to come up. I do think that there is a tremendous risk that is for these both REITs coming up with their valuation report later. And the third best performing REIT in the last 2 weeks is Capital Pacific Oak US REIT, which is called REIT in short, and they are the best among the three. Okay, there are some differences, right? So first is that they managed to grow their revenue in the latest 3Q numbers. Okay, Manulife didn't report. They don't usually report quarterly. They only report half yearly. Okay, in terms of revenue numbers, and Prime US REIT has a 1% decline, right? So called REIT still managed to increase. So that's an encouraging sign. And the second thing is that occupancy rate is also highest among the three, right? Above 90%, while the rest, the remaining two are about 85%. And gearing ratio core REIT is also lower at 39% as compared to the other two. That is higher. And in fact, core REIT did not have a valuation drop in FY22 when they did a revaluation of properties. In fact, it went up slightly. Okay, so in that manner, so along that lines, which means that core REIT is unlikely to suffer a big valuation drop, even if there is a valuation drop, okay, in FY23. Okay, so I think that among the three, core REIT seems a lot safer, and that, and of course that's not without a reason behind it, and this is the explanation. Okay, their properties are different. It's not really your grade A kind of office space in those key cities. For this core REIT, their properties are closer to those tech hubs, right? Like your California, like in Washington state, which is the Seattle city, and even in Houston and Austin, Texas. These are areas where tech companies are moving their headquarters to, right, in the state of Texas, and hence they have this kind of demand from these companies, and which is not really like your big law firms or big banks that's occupying them, and they're more like tech hubs. And there's also one healthcare hub that is in Bel Air Park. Okay, that is also in Houston, Texas. Okay, so their value proposition is a little bit different from Prime and Manulife US REIT. So I do think that this is probably the key differentiator why core REIT is still performing better. It don't suffer a valuation loss as of this point in time. Okay, of course, going forward we don't know, right, how whether this commercial property will spread towards this tech hub properties as well. So lastly, I just want to say that there are generally good signs for REITs. Long-term rates are falling, and also the Federal Reserve is less hawkish. Okay, generally I think that there are good signs for REITs. The long-term rates are falling, and the Federal Reserve is also less hawkish going forward. So which is likely that we have reached the peak interest rate, and interest rates are more likely to at least stay the same, right, or even fall rather than going up further. Okay, and maybe if we are not at the bottom of the market, I think that we are pretty close. And I do think that for REITs, if people want to accumulate, I've been saying that for many months. I do think that they are at the attractive prices. Okay, although you can't really compare to say, oh, AAA bonds are like 3+%, the REITs are only giving like 6%. Is the difference enough? I don't think it's healthy to look at that, right? Because the interest rate is dynamic, it's not static. It's not going to stay, your AAA 10-year bond is not going to stay at 3% for the future, right? It might drop to 2+% next year or next year as interest rate gets cut as well. So I think that given this dynamism, it's important to just decide whether you feel that the price that you can pay for the current REITs, which have been beaten down, right, whether they are worthy for your consideration, right? Because even for property yields in Singapore, I don't think you can get 6%, right? Probably now property yield in Singapore residential is like 2-3%, right? So I do still think that there is a value in some of the REITs that are trading at these current levels. And second is that the REITs that fell the most have also rebounded the most. As we can see in the US REITs, in the last 2 weeks, they've gone up 33% or more, right, in just 2 weeks. Okay, so which means that there can be some capital gains, substantial capital gains for those bottom pickers who want to buy this kind of rebound and then sell them for substantial profit in a short period of time. Okay, of course, such timing can be a bit more challenging. If you get the timing wrong a little bit, you might suffer some losses. So there is definitely some risk in speculation. And the And the quality REITs are usually the ones that are more stable. They fall less and they also go up less. So given their stability, investors can keep their sanity a lot better. It's easier to hold for long term. And lastly, I think that the US commercial REIT valuation may still fall further, especially the valuation report is going to come out end of 2023. And that I'm not positive about it, even the REIT management not positive about it. So I think there are some embedded risks that's there. Okay, so investors should be aware about that and assess the risk whether they're still worthy, even if you want to do a speculative buys over here. So I hope this can give you a better picture of what's going on in the REIT market, especially with the US commercial REITs. They have been moving quite a lot lately. So do like this video, give me a thumbs up, and subscribe to the channel. I'll see you in the next one. Goodbye.